For more on this, I'm joined by David Gantz. He's a fellow in trade and international economics at the Baker Institute's Mexico Center. I was online looking at the Hofuson Industrial Park website. They're very direct in recruiting Chinese companies. They spell it out, just as Frank did. You know, this is a great alternative. You can export your materials. You can manufacture it in Mexico, get it to the U.S. quickly. It saves you weeks. It also helps you avoid some of the trade barriers. What do you make of this?
Well, I think it's basically this is a continuation of a practice that European Union, Korean, Taiwan, and Japanese companies have been following for almost 30 years, moving their operations for the huge U.S. market nearby to Mexico, nearshoring, low labor costs, proximity to the U.S., avoiding penalty tariffs of one kind or another, and essentially diversifying their production from completely relying on the home country. Plus, of course, the duty-free entry benefits that your correspondent already mentioned. The shorter supply chains. You know, you can get a container from Monterey to most of the U.S. in about 3 days or 4 days. It's at best it's 3 weeks from Shanghai or more. So there are all sorts of significant advantages in addition to eliminating some of the risks of COVID-19 and the risks of the U.S.-China trade war.
Yeah, you know, David, that's the thing I was thinking about. You know, if I've got a market, I've spent years developing this trade relationship, then all of a sudden you've got this big trade war going on. This looks really desirable, doesn't it? Because now, as you can see, you can get your products there a lot quicker. You don't have to deal with the tariffs. It saves you millions of dollars per month. It can keep my business humming while these leaders try and figure out the new normal.
I think all that is quite accurate, and I think any major multinational corporation will do almost anything possible to avoid giving up its customer base. And the big part of these Chinese companies' customer base is in the United States. So they're looking at various options, the most obvious of which is let's make it in Mexico to maintain that customer base, that profitability, and that market access.
This is a phased industrial park, so there's more expansion coming. Do you think we'll see more of these?
I think it will continue to expand over at least the next 3 or 4 years, and I don't think it will just be Chinese companies. I think the reshoring, the nearshoring movement, the shortening of supply chains is something that is fairly widespread. I mean, globalization isn't going away, but I think there will be more effort to source a lot of goods nearby, as has been happening in some sectors like automobiles and consumer electronics for 25 or 30 years. So it's not really new, but it's definitely expanding to other sectors.
David, is there a delicate dance at play, though, if you're Mexico trying to assuage your neighbor to the north, the United States, also have good dealings with China? I mean, is there a delicate dance underway?
I think there is, but I don't think it applies to things like furniture. I think if you start getting into highly sophisticated electronics or those issues, you'll have the same issues as you would if the goods were coming directly from China. But if you're mostly focusing on lower labor cost products, which have little or no economic national security issues, I don't think it's a problem. And it's worth remembering that in time, some of these companies will establish local supply chains. If you're making furniture in Mexico, Canada and the U.S. are enormously valuable supplies of lumber. Yeah. So some of this was probably going to benefit producers of raw materials in Canada and the U.S. as well as in Mexico.
As they say, it's a win-win in that case. Ed, thank you so much for your analysis. Really appreciate your insights.
My pleasure.